Oversold chart pattern part 1. Last time I talked to you about the 3 patterns.
Hi, full disclosure, I'm learning iMovie. Please pay attention and enjoy the show. Thanks, Jason.
Patterns I play consistently. Oversold chart pattern, continuation chart pattern, and breakout chart pattern. Let's start with the oversold chart pattern. There's 2 indicators that I use to predict when a stock is going to bounce out of oversold. And there are 2 things that I'm always thinking about. Let's start with the 2 indicators. RSI, which stands for Relative Strength Index. When the stock is below a 30 RSI, write this down, 30 RSI, it's oversold. When it comes above the 30 RSI, it's coming out of oversold. There's another indicator that I love to use, and that's the MACD. When the black line on the MACD crosses the red line, that's the signal line or the buy signal. That is a bounce opportunity setting up. I will show you this visually in a PowerPoint in the next Penny Stocks 101 Oversold Chart Pattern Part 2. Let's use a fishhook to visually think about what we're going to see here. When a stock is trading normally, it's right around the eye of the fishhook. When bad news hits, it falls sharp down the shaft, and then it starts to slow down, and then it curls up towards the barb, right? That's a fishhook. Think about it. Fishhook is here at the eye where you tie the fishing line to it, and then it goes down the shaft, it rounds out, and it bounces up towards the barb. The barb is about halfway up the shaft. We're looking to play that bounce, but when? Well, when a stock falls sharp, we don't want to buy it right there. There's panic selling going on, there's short sellers piling in. We're going to watch for it to round out, and we're going to buy it right there. And the reason why is because if it doesn't bounce up towards the barb, we have a very tight stop loss by buying the rounding action on the fishhook. Think about a cut on your hand. It starts to bleed a lot at the beginning, right? But over time, the cut heals, the bleeding slows. The same happens with a stock when it has bad news. It falls down fast, and then the bleeding slows, all right? So lots of bleeding, and then the bleeding slows. Right there is where we want to buy the stock. If the bounce happens, we're going to sell it for 5 to 20% profit. I even had a trade once where I bought it on the curl of the fishhook after the bleeding slowed, and it bounced 100% in 3 days, and I made $40,000. This usually doesn't happen. I'm usually shooting for 5 to 20%, but once in a while, when it's rounding out, the company drops good news, and short sellers get squeezed. There's not a lot of profit takers because it just crashed. There's nobody to take profit, so the bounce can be extraordinary, and sometimes it goes higher than what would be seen on a fishhook where the barb is. It might go all the way back up to where it was trading or even higher. I'm going to show you this now in part 2. So look for the next video and look for the PowerPoint, and I'll show you exactly what I'm talking about with both the RSI, the MACD, the fishhook pattern, and where the bleeding slows, the volume gets smaller, we move in for the bounce. Thanks for listening. Talk to you soon. Let's take a look at a real-world trade. Definition of oversold: a condition in which the price of an underlying asset has fallen sharply and to a level below which its true value resides. This condition is usually a result of a market overreaction or panic selling. A situation in technical analysis where the price of an asset has fallen to such a degree, usually on high volume, that's key, high volume, that an oscillator, in our case, the RSI or Relative Strength Index, write that down, the oscillator has reached a lower bound. Oscillator is a fancy word for lower and upper limit. In the case of the RSI, or Relative Strength Index, it's 0 to 100. Remember I said below 30 on the RSI is an oversold reading. I'm about to show you a real-world example of a trade I made in an oversold chart pattern that's setting up for the bounce. All right, so this is generally interpreted as a sign that the price of the asset is becoming undervalued and may represent a buying opportunity for investors. All right, so in our case, that's a bounce opportunity. All right, so now for a real trade. This is what the watch list said the morning that I alerted CRRS. So I put this on the watch list and I bought it later in the day. This was one of my best trades ever.
Usually I'm only looking for 5 to 20%, but this one put 100% or $40,000 in my pocket. I want you to see the bleeding. I want you to see the rounding action where the fish hook is turning, and I want you to see where it heads up towards the barb. So let's take a look at what the watch list said. CRRS, strong guidance ahead of their November 13 earnings, helped slow the bleeding from a recent pullback into oversold. Candle over candle in the continuation pattern and coming out of oversold, which means the RSI is coming out above the 30 line. Leaves a lot of range up to the 50 moving average for this swing trade. This is what the chart looked like when I put it on the watch list. Do you see the bleeding on the chart and how that bleeding slows? Do you see the relative strength index down here below the 30 line? This is the RSI. It's an oscillator, so it has an upper and a lower limit. The upper is 100, the lower is 0. Notice how the RSI shows up as brown when it is oversold below the 30 line. This hits my scanner, and a lot of stocks like this hit my scanner. I start to watch them all, and I look for that bounce opportunity. Now, we also talked about the MACD. That's the black line here. And when it crosses the red line to the upside, it's a confirmed buy signal for technical analysis, or technical analysts, I should say. Do you see that black line here crossing the red line to the upside? See how it intersects and crosses to the upside? If you track this higher and look at the price, notice how it went from 280 to 562 on that move. So we're looking at this sharp drop in momentum and anticipating that it's going to curl and cross it to the upside. So these are the only two technical indicators that I use to identify this pattern. It's very easy to spot, right? All right, so this is before. Look at the bleeding, the heavy volume. Remember we said lots of bleeding, heavy volume. And then look at how it slows because the company guided strong heading into their earnings call. So the stock drops significantly, well over 50% in a short period of time. Write that down. I'm looking for a sharp drop, well over 50% in a short period of time. What is a short period of time? Under a month. It has to be 50% plus under a month. All right, moving right along. Remember I said fish hook, price falls sharply. So here's where you tie your line to the fish hook. The price falls sharply. The selling starts to slow as the fish hook rounds out. As it's rounding out, we identify this rounding as a base, and this is going to become our stop loss. We look for a candle over candle situation. Now let me go back one slide to show you the candle over candle that I was referring to. This is the fish hook shaft. This is the rounding, and here's the candle over candle. And all it is a visual representation, my way of saying, look, this candle is over that candle in the rounding area. The fish hook is starting to set up. We're oversold. We're anticipating an MACD cross. We have the shaft. We have this doji candle here. Notice how it doesn't look like the other candles. The other candles are high volume bleeding. This day was lighter volume. This candle doesn't look the same as these bleeding candles. And then we get an up day where it moves 7% because the company released some news on good volume. So this is the candle over candle setup or the rounding action. So we're now identifying this area as our stop loss. We'll go back to the fish hook. So we're getting that candle over candle on the fish hook. We have our stop loss. We'd like to be about 3 to 5% from our stop loss in case it doesn't work out. Meaning if we buy it here because it looks like it's going to bounce, but it doesn't and it heads lower, we're going to use this area on the chart, that rounding action, that base, as our exit so that we don't let our losses get out of control. Part of trading effectively is being disciplined. And if things work out well like they did on this trade for me, we buy it and it heads up towards the barb, we're going to sell it. Now the range between the buy as it's coming out of the base and the resistance, all right, where we would be looking to sell before should be 30-40%. That range should be 30 to 40%, which is why it needs to drop 50% plus in under a month so that we have the opportunity for it to bounce 30% across 4 days. Inside of that 30%, anticipating that I, A, will never get the best entry, and B, will never get the best exit, inside of that 30% range, I am looking for 5 to 20% profit. This is what the chart looked like after I bought a couple of days later. So, this is the exact same chart but I reduced the time frame so you could really get a look at how that bleeding turns into a candle over candle situation right here. The RSI, remember, an oscillator with a lower and an upper limit, in this case 0 to 100, write that down. It's an oscillator, 0 to 100. When it's below 30, we're watching for the bounce. So the RSI comes out of oversold. Look at how the MACD is heading for the signal line crossover. I never wait for it to cross over. I anticipate the crossover, because if you wait for the crossover, you miss the majority of the move. In this case, I bought, and in 3 days, I made $41,000, just shy of 100% profit, as it came out of oversold and the MACD set up for the crossover. So here's your bleeding down the shaft of the fish hook. Here's your rounding action. We also have a catalyst where the company said, hey, guidance for the quarter is going to be good. So panic selling, the bleeding stops, right? Here's the cut and the bleeding stops, and the bounce happens. Now, usually I'm just looking for a bounce of 5 to 20%. But in this case, it just kept going. So I kept trading the stock, and I ended up topping out right here. Now, it's natural for this to be resistance because this was the previous price action. So naturally, it stops there and turns back down. Usually, I'm looking for 5 to 20%. And that's a really good trade if you can hit 5 to 20% in a few days and then go do it on another stock. Now, look what my client said. But before I go there, let's go back. You see it now with the fish hook? Pause and just process this. It's so easy, it's unbelievable. And I do it time and time again. See it now? I've got a scanner that picks up all of these charts, and then I just monitor them for trades. And when they don't work out, I take small losses. And when they work out, I get juicy wins. These are the testimonials I collected just from a handful of clients. 92% since joining.